you might have pulled out the tagline, the new tagline for the Fed, the Reserve Bank of Australia, and maybe every bank out there, keeping incompetent and irrelevant businesses in business, right? That's actually what they're doing. It's hard to believe, man.
Well, that's what they've been doing for many years, is supporting the incompetent, and now there's a price to pay. If you live in a actual free market system, people, there's got to be consequences to bad decisions. When there are no consequences to bad decisions, then that's how bubbles are created, and that's when pain is created. And when you have people trying to tinker with the free market system, picking winners and losers, which the government argument is famous for, that's when trouble is created. And back in 2008, I don't know whether you remember this, Rob. I don't know. You're probably like 4 years old at the time, but back in 2008, 2010, there was a time there during 2010 where there were so many foreclosures, so many houses that had been foreclosed on, that if you had walked into a bank wanting to see the foreclosure list, if you walk in and say, "Yeah, I want to talk to somebody about foreclosures," the standard response would be, "Yeah, okay, just give me your address. We'll send someone over to take pictures of the." But then you would say, no, I'm here to buy. And you'd see a look of shock on their face. What? You want to buy? And you say, well, yeah, but I don't want to put any money down. That's when you're going to be able to set your terms. When things get that bad, and we are going to see that again. It might not happen this year, or might not even happen next year. It takes a while for the pain to really be felt. But you are going to see another opportunity like that in the relatively short term. So if you're a young person, if you're a young couple and you're planning to buy a house, well, listen, house prices are still at all-time high. They're starting to roll over. But listen, if you can be a little bit patient, take this time to secure what you do have, primarily through gold and silver, so that when that event happens, you're going to be able to go in and have a life-changing purchase.
I don't think a lot of people understand that. Let's just pull on that thread for a second. If you say you bought an ounce of gold today, and just use an arbitrary number, say it was worth $2,000 US. You bought an ounce of gold, but then inflation runs away, and suddenly in the house that you need to buy, the price goes away. So instead of being a $500,000 house, the market collapses, and now that house is worth $250,000. So we're seeing the inverse reaction happen. The market collapses, inflation goes up, but the value of your gold goes up. So that 1 ounce of gold that you've got is now probably worth $8,000 or $9,000, maybe even more, depending on what happens in society, depends on what goes on. It's a little bit of a bet still. It's still a little bit of a gamble. But what we know is that if you lock in your cash into gold today, you're locking in the value at today's value. And as the price goes up of gold, and over a long period of time, it's gone up and it's outperformed just about every other asset class out there. I think it's like, from memory, it was like 400% in the last 20 years. It's gone up. So if 2000,
a lot more than that.
Yeah, it's a lot, right? So I can't remember the exact numbers, and it depends on what you're looking at as well. But if you got a 400% return in the next 20 years, and your $2,000 was worth 400% more in 20 years' time, well, right there is a reason to actually lock in the value. And we're not saying to lock in all of your wealth into that, to put a percentage into it. So you're locking in your wealth. That's an insurance policy, and it's a mechanism that is time tested over centuries. That's how if you were digging in the backyard today and you dug up some Spanish gold from American settlers from the 1500s, imagine how valuable that gold would be. But back in the day, they walked around with gold pieces in their pocket because that was their medium of exchange. But if you had a pockets full of gold pieces from the Spanish conquistadors from the 15th century, imagine how valuable that would be today. That would be amazing. So that just kind of highlights that example. That's one thing that you can do. And we have that mantra here on the channel, reduce your exposure to the bank, because if the financial situation happens and that report, you underestimate how powerful the words were in that report, Ed. That Zero Hedge article was just like bang on point. It was like so to the point. But then you highlighted it at the end, just in 2008 to 2010, just over 10 years ago, there was 10,000 banks. Now there's 4,000 banks, and they want that to be whittled down just to a handful. Even if it's more than you say, and say 100 or 200 banks, that are left over, we're going to see 80 to 90% of the banks go away. So that's the reason why you need to reduce your exposure to the bank and lock in the value of your cash today, because it's been chewed up by inflation, into gold and silver. And there is your security plan. That's, people always say, oh, what can we do about it? Why? And people always say to me, why do you care about it? Why do you care? And to your point, Ed, you say it beautifully, man. You say you don't have to be a victim of this circumstance. You can do something about it. And the optimism bias that we have in our lives is we've never experienced something like that. So the chances of doomsday happening, like you and I keep, henny penny, the sky is falling, we keep sounding the alarm that doomsday is happening, your optimism bias gets in the way and says, no, that's not going to happen. There's no way that's going to happen. And therefore you don't do anything, but you need to do something now.
Yeah, another stat, another unfun fact is, again, in case you guys have forgotten, we've talked about it several times, but just to remind you that we had 3 bank failures, just 3, 6 weeks ago. All right, and the combined losses between those 3 banks are more than the entire loss during the 2008-9 financial crisis. So we've already had a crisis that was bigger back in 2008, 2010. We've already had it.
I think the difference is that what you're not seeing this time is you're not seeing pictures of men with boxes of belongings walking out of offices in New York. You're not seeing that.
Well, so far, the government has been they've been able to sweep it under a rug a little bit. We'll take over your debt. We'll bail you out. We'll do. So the government has socialized those losses. And that was okay. And that was an important. That was a game changer. That was, I don't know what do you want. That set a bad precedent when between those 3 banks, they took over the debt and put it on us. Okay, so they socialized that loss. So the question is, are they going to do that for every bank that goes under now? So are there no consequences to banks making bad decisions? That's the moral hazard that we've been talking about. When there are no more consequences to bad decisions, then these bankers have no reason to make better decisions. They're going to keep making bad. There has to be consequences to your bad decisions. And so, but so far the government has done everything they can to now the FDIC is supposed to cover any account worth $250,000 or less, right? Well, SVB Bank, there are actually very few accounts that were less than $250,000. Most of these were multi-billion-dollar accounts, largely held by tech VC firms,
Silicon Valley,
yeah. And the Chinese government. A lot of the companies there were CCB.
Hey, my head's about to explode when you're telling me the US government's bailing out Chinese businesses in San Francisco.
Yeah. And I'm sure you're shocked.
It's like Zelensky signing the BRICS deal. Stop it, man. Stop it.
Yeah. And I'm sure you're shocked. You're shocked to learn that. So now the idea of even with SVB Bank, we did see people standing in line, Now, it turns out they did end up getting paid because over the following week, the government says, don't worry, we'll make you whole. But that doesn't mean you can't count on that, my friends. So, and even now, if you try to go to the bank and take out a substantial amount of money, they're going to make you work for it. You're going to have to justify, so what are you spending this money on? But this is the kind of thing, they're making it hard for you to get your money out of your bank. Remember, okay, once again, it's not your money.
No, it's not your money. You've got to reduce your exposure to the bank, get some gold and silver, and create some passive income. Folks, I'd also recommend, as a number 4, is to have a look at this book. I can't really show you. There it is there. It's called The Death of Money, and it's written by a fellow named Jim Rickards. It's a little bit old now. It's an older book, but it talks about the tagline on the book is the coming collapse of the international monetary system. And it's a little bit it's a bit labor intensive. You're going to have to work for it with that audio book in your ears. I'll put the link in the description after the show. I'll pop it in there for you. But it's labor intensive, but it's worthwhile listening to how other countries have self-sabotaged themselves. And he talks a lot about what he calls hyper finance in that book, and how the Chinese economy is based on hyper finance. The government uses companies to go forward and create their Belt and Road Initiative. And it's a public-private partnership that they use, or otherwise known as fascism. And they use the communist commissar. So it's a hybrid of fascism, communism, and technocracy, and capitalism in there as well. And they send these companies and businesses forward to go and do business in these third world companies. And they're backed by the hyper finance of the CCP. So what do you need? You need to build an airport. Okay, how much is that going to cost? $2 billion? Okay, there's your $2 billion. Get it done. Make sure you use Chinese workers, yeah? What do you need to get them in there? We'll help you. We'll use the Air Force to get them in there, etc. So there's a series of things that the Chinese government does with hyper finance.